Hi, this is Lara at Elliott Wave Stock Market with an extra video update. For you after the trading session. Thursday, 21st of December has ended. I'm expecting a small fourth wave correction may continue for a few days to move price lower to a target at 2662. When that's done, I'll be expecting the resumption of the upward trend. However, if we see a new all-time high tomorrow, that view would substantially change. If that happens, I'll then expect an increase in upward momentum, and the next target for a reasonable interruption to the trend would be at 2833. Elliott Wave analysis first, classic analysis at the end of this video, to see how much, if any, support there is for my main wave count. This is my main wave count, which expects a supercycle fifth wave began at that low at the end of the global financial crisis in March 2009. Supercycle wave 5 is unfolding as an impulse, and within it we have cycle 4 over here. So this wave count sees a cycle degree fifth wave within a supercycle degree fifth wave within a grand supercycle degree first wave possibly coming to an end. Along the way, there will be corrections along the way, and a couple of them should last probably about 2 or 3 months each. So the end of this upward wave, the end of this bull market, is not expected to be for another 1, 2 or 3 years. And that will give enough time for market breadth to show some reasonable divergence, some multi-month divergence with price before we see the final high. At this stage, there is no divergence between price and the AD line. And so I do not think this bull market is near to completion yet. Cycle 5 is unfolding as an impulse. So far we have 1, 2, 1, 2. Now we need to see the end of 3, and then we'll expect 4, a fifth wave, another big fourth wave correction, and a final fifth wave up. And so along the way up, I am expecting 2 fourth wave corrections probably to last about 3 months each, well 2 to 3 months each. So to be about 10 to 12 weeks in duration. So that primary 4 and intermediate 4 are reasonably in proportion to the counterpart primary wave 2 and intermediate 2, so that at the weekly chart level the whole impulse for cycle wave 5 has what we call the right look, because it's the proportion between second and fourth wave corrections of the same degree which give an impulse the right look. Intermediate 3 is unfolding as an impulse. That's the only structure it may be. So far we may have 1, 2 and 3 incomplete. When it's done, I'll expect a little fourth wave correction to last about maybe 3, 5 or 8 weeks, or possibly to be even in duration with its counterpart minor 2, which lasted 4 weeks. So a smaller fourth wave correction to last just a few weeks coming up, but we're not there yet. At this stage, minor 3 looks like it's unfolding as an impulse. So far we have minute 1, 2, minute 3 exhibits a good Fibonacci ratio to 1. I am expecting right now that minute wave 4 is underway and should be over within a few days, and then minute wave 5 up will continue on higher to new all-time highs to end the impulse for minor wave 3. Let's have a look at the middle and end of minor 3 at the daily chart level. We're going to look from this high and this low, this point and this point. So here's a nice impulse for minute wave 3. It's 4.79 points longer or greater than 1.618 times the length of minute wave 1. I've noted a bunch of Fibonacci ratios on this wave count so that you can compare the Fibonacci ratios in this wave count with my alternate, and you'll see that this main wave count has better Fibonacci ratios than the alternate. That gives it a slightly higher probability. There's some other reasons why this is my preferred wave count as well. Minute wave 3 subdivides very nicely as an impulse. 1, 2, a very extended third wave. It has a Fibonacci ratio of 6.854, the length of the first wave. That's not a common Fibonacci ratio, but it is correctly, mathematically, a Fibonacci ratio. It's 12.81 points off that. My judgment for determining if the variation is acceptable is I look at the wavelength that I'm calculating a Fibonacci ratio for, and if the difference off a perfect Fibonacci ratio is less than 10% that length of the wave, then I consider it to be acceptably close. So although this is actually quite a big distance, it is less than 10% the length of minuet wave 3. So I've concluded, according to that rule, or my own personal guideline of how I approach this, that this is acceptable. Within minuet wave 3, we have an extended first wave, second wave correction, shorter third wave, fourth wave correction, and shorter still fifth wave. This wave count meets all Elliott wave rules. The third wave here within this impulse is not the shortest, and there are no overlaps between fourth and first wave price territories here. Within this possible extended first wave, there are very, very good Fibonacci ratios for micro 3 and micro 5, and it fits quite nicely with MACD. Toward the end of minute wave 3, we have stronger momentum than the first wave. Draw an Elliott channel around this upward movement from the end of the first wave to the end of the third wave. Place a parallel copy on the end of the second wave. If minute wave 4 is deep enough and gets down to this trend line, I would expect it to find quite strong support there. But it may not get down that low. It may end about midway within this channel, because that would be the fourth wave of one lesser degree price territory. So this is one fairly common place for a fourth wave to end. Minute 4 may not move into wave 1 price territory below 2490.87. When minute wave 4 is over, I'll then add to the target calculation for minor 3 to end at another wave degree, a minute degree, and so at that stage it may change or it may widen to a small zone. For now, let's expect the most common Fibonacci ratio to be exhibited by minor 3, that of 1.618, the length of minor wave 1. That's why I've calculated that target. At the hourly chart level, here's the end of minute 3 and the possible start of minute 4. From this high to this low, this downward movement will subdivide quite nicely as a leading expanding diagonal. And now from this low to this high, this upward movement looks best as a completed 3. And this downward movement has moved back into this price territory. So we can't now count this as an unfolding impulse upward, subdividing 1, 2, 3, 4, 5, because 4 is now in what would be first wave price territory. So what this low at the end of Thursday's session means is this upward movement now looks complete, and it looks most likely to be a three-wave structure. That adds a little bit of confidence at the end of Thursday's session to this wave count. Now we can have further confidence in it. If we see a new low below 2676.11, that would invalidate the alternate and so add more confidence to the main wave count. The target range for minute 4 is the price territory of the fourth wave of one lesser degree from this high, 267188, to this low, 265201. And within that target range, I've calculated a target for minuet C to reach 1.618, the length of minuet A, at 2662. So that fits within the target range, and so this should be a reasonably fairly reliable target if this wave count is correct. And the invalidation point is the same as at the daily chart level for exactly the same reason. I'm just following the Elliott wave rules there. This is an alternate wave count. It's identical to this high and this low. And now, what if minute 3 was over here? What if it wasn't over at the last high? What if this was minute wave 4? There's a reasonable proportion, if that's the case, between minute waves 2 and 4, and there are still some reasonable Fibonacci ratios, but as you can see, the Fibonacci ratios for this wave count are not as good as for that main wave count. And also, when we try and draw a channel around this using Elliott's technique, it's well overshot by this upward movement. This has a better look as the end of a third wave at minute degree rather than a fifth wave within minor wave 3. That would have a better look. I don't have as much confidence in this wave count as I do for the main wave count at this stage. Within minute wave 5, it may be unfolding as an impulse, subdividing 1, 2, 3 incomplete, and we'll need 4 and a fifth wave up. The target here for minor 3 is the same. It expects to exhibit the most common Fibonacci ratio to minor wave 1. So it's how the subdivisions unfold on the way up that really is the material difference between the two wave counts. Now we could change the labelling within minuet wave 3. We could have some minuet 1 and 2, and then we could have another 1, 2. So it could be unfolding as an extension, starting off with 1, 2, 1, 2, and now moving 3, 4, 3, 4, 5. That would also fit. Let's look at the hourly chart where minuet 2 down here as this point down here. So far, I'm labelling it 1, 2, 3, 4 because this 4 has remained above this first wave price territory. So we certainly could label like this, and this does exhibit an increase in momentum, so it could be the third wave. But we could also label it micro 1 and 2 and see subminuet 3 not over here. It could be extending further higher. If that's the case, then the limit would not be material. If subminuet 3 is not over here and it's extending higher, there's no limit at the stage for the end of minuet 3. But if we label it 1, 2, 3, 4, 5 to complete, then 3 is slightly shorter than 1 by 4.07 points, which means that 5 may not be longer than equality in length with 3, so that the core Elliott wave rule is met, and the third wave within this impulse is not the shortest. That limit would be at 2719.09. So if the whole structure ends there and then we see a sizable correction, then that's how I'd label it. But if price just keeps on going up through this limit, I'm going to have to move the degree of labelling within subminuet 3 or down 1 degree and see it as incomplete. The final target for minor 3 remains exactly the same for both wave counts. So it's just the corrections along the way up, which should be different for the wave counts. Okay, let's not go over the weekly chart because I did that at the end of the week for Elliott Wave stock market members. Let's just jump straight into the daily and see how this is developing over the week. At the end of the week, things looked quite bullish, but now we've got a little bit of bearishness starting to turn up in these charts. We had a gap here, which we assumed was a breakaway gap until proven otherwise. Proven otherwise meant closing of the gap means it's now an exhaustion gap rather than a breakaway gap. And now we've got a bearish engulfing candlestick, and today we've got a gravestone doji. So we've got a closed gap and a couple of bearish candlestick patterns. So that makes the picture a little bit more bearish. That now, in conjunction with overbought RSI and overbought stochastics, both of them exhibiting reasonable divergence, looks like we might have a trend change of a more sizable magnitude than the last few little trend changes along the way. Price rose for Friday's session with a high high and a high low, but it came on slightly declining volume, so there's a little bit of weakness in today's upward movement, along with the gravestone doji that looks slightly bearish, and so I'd be expecting it's fairly likely we're going to see a red candlestick for tomorrow's session. ADX is still telling us though that we have an upward trend as a lagging indicator, but at this stage it does not tell us this trend is ending. The black ADX line is still rising and the positive DX line is still above the negative. It tells us there's an upward trend, but the trend is tired. ATR is overall, it's had some decline and now it's overall flat. So even though bulls are able to push price up, they're able to do it by smaller and smaller amounts each day. On balance, volume is constrained within these new trend lines. Well, we've got a new support line here. It's been tested 3 times, doesn't have too strong a slope. It's not long held, but it's not too brief either. This resistance line is stronger. It's practically horizontal. Well, I think it is actually horizontal, and it's been tested quite a few times and it is long held. So if we do get any more upward movement tomorrow, I'd expect this trend line forming resistance for on-balance volume would be pretty likely to halt a rise in price. If on-balance volume breaks above this trend line, that would be quite a strong bullish signal. If that happens, then my alternate Elliott wave count would be indicated as more likely. I've already commented on RSI and stochastics. MACD remains very bullish. It is a lagging indicator. It's based on averages. Bollinger Bands were rising here as price was rising, and now for a little while Bollinger Bands have been contracting since back about here, and so it looks like the trend is not now coming with a normal widening of volatility, and so we may be getting ready to roll over and have some downward movement, a more reasonable correction. That's what that points to, I think. But that's certainly open to interpretation. Looking at price and inverted VIX, we had a bullish divergence yesterday. That's been followed by a day with a higher high and higher low. So that's the technical definition of upward movement, even though it's a gravestone doji. And so that bullish divergence may now be resolved by one upward day, or it may need another day before it's resolved. And what about the AD line? Today, price moved higher, the AD line moved higher, and neither of them have made new all-time highs, and so at this stage, there is no divergence between price and the AD line in order to indicate any weakness in either direction. That's all for me with your extra video update, and I hope that all of our members are getting ready for a fabulous Christmas with your families and looking forward to a very relaxing holiday.